Good morning, traders from each and every part of the world that are joining this series of the Daily Morning Market Call. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global market to assess various financial asset classes and make possible profits now. Today again is a momentous day that we have just had the consumer price index being released in the United States. And the consumer price index was released yesterday during New York time. But before we dive deep into looking at its various intricacies, first and foremost, if you can hear me, comment good morning so that we proceed with little or no hesitation. Before we go deep into looking at the numbers which came out yesterday from the United States, which is CPI, the consumer price index, which is a key inflation data point, it is important we have the reminder that this is going to be a pre-recorded YouTube video. To mean you could find it on YouTube at HFM Kenya. Kindly click on the notification button, subscribe, so that you are not left out in future content that we produce from time to time. On top of that, also you would share the link to this YouTube video so that it can reach more people to improve on our algorithms. And it is our dedication to you that we will keep improving on our content as we aim to bridge the educational gap in context to the financial markets. Now, beginning with fundamental analysis, to look at the forces which are moving the markets right now, of course, in anticipation for the forces which are going to come, and with a keen interest in the forces that already came. We had the consumer price index year on year yesterday printing high above what was anticipated. The previous was 2.9%. The consensus or the anticipated one was 2.9%, and the one which came out with 3%. So we see a 0.1 increase in the consumer spending habits. Now, what would this mean? Before we go to see what it means, let's dive deeper. This information is found on HFM website at hfm.com. When you come to tools and education, click on the economic calendar, it's going to bring you here. And then you pay attention to the one which are red foldered, which are full red folder, to mean they are high impact. And then that's where you're going to find this relevant data point in context. So when we click on it to see how the economy of the US has been performing in context to CPI, want to see the CPI data in context. So we see the actual which printed out yesterday was 3%. For the previous month, we had the data printing at 2.7%, and the month before that at 2.6%. And the month before that, that's the month of October, we had it printing at 2.4%. So we see an increase in consumer spending habits in the United States drastically 4 times in a row. That would raise concerns that the Federal Market Open Committee, or the Feds, which is Central Bank of the United States, would tighten its policies. And by this, when I say tighten its policies, simply mean cut interest rates because inflation is going way above what they prefer, which is at 2%, and it has been drastically improving. Now, from the Fed's interest rates decision held on 29th of January, we saw them hold interest rates at 4.5%. But with the concerns of the rising inflation, there are high possibilities we will see these interest rates being cut to cool off inflation and have this number come down to around the average donation, which is they like it to be at 2%. Now, the interpretation of that on the chart, beginning with currencies, from the daily time frame, this is the Euro USD, the Euro paired against the United States dollar. Overall, we're in a bearish trend. We saw a little bit of retracement from the positive news which came out from the Eurozone, which was PMI services. That must have been a week ago. Price attempted to reverse from this bearish trend to change its character to a bullish trend, Now, we observe that the overall trend is in continuation. With the positive CPI, it would possibly give us impetus to keep on looking for sales, because most likely this high is not going to be taken out, and the key level at 1.02720 is possibly going to be retested and broken, asserting the dominance of the United States dollar against the euro. Now, walking into the Fed's decision, which is going to be coming in later in the month, we possibly expect interest rate cuts, which is going to give much more impetus to the US dollar to keep having its dominant traits over its peers. So that would mean short positions for US dollar quote currencies. And on the flip side, when we take an example of US dollar based currency, with the US dollar coming in first, USD CHF, we see that it has been on a bullish trend, a narrative that we are likely going to see a continuation of after the higher than expected CPI number coming in and the expected interest rate cuts. So we're likely going to see these highs being taken out at this key level at 0.91980 to keep giving us confidence for the bullish trend. Off to commodities. Yesterday we had a slight retracement of gold to the downside, possibly because of the higher than expected CPI, which had the US dollar challenging the presence of gold as a safe haven. But in understanding commodities, it's better to easily understand them by looking at the overall geopolitical happenings. And we know right now we are having pressure points from the United States on her neighboring countries, and also trading partners who they do not necessarily share a border, on reviewing of their trade terms. And this has been done through the tariffs that the new president of the United States, Donald Trump, has been constantly pushing for. This is causing fear and uncertainty, which has been making gold to be in a bullish trend. We are likely to see this high being taken out to possibly even touch the 3,000 mark as we keep unveiling new history into the price action of this precious metal. Off to indices, beginning with NASDAQ, we see that we are still in the consolidation. For the traders who like trading US 100 or NASDAQ, not really having a good time right now, perhaps are waiting for the uncertainties to go away in the global markets, or to be passed by time, for us to see a much more proper price action, where we're going to see a challenge of this key level and the price continuation with this overall bullish trend. A scenario that we're also going to see on S&P 500, the consolidation and the attempt to break out the high. A scenario that we're also going to see on Dow Jones, US 30, which we spoke about throughout the week. off to oil. The prices and demand of oil has been decreasing. Yesterday we saw the day before yesterday we saw an attempt to reverse this bearish trend that had begun, but forming a fake out around the 72.73 area of interest. Now we see the price of oil continuing to decrease, and we have said this at the beginning of the week. I think we called it out from up here as it was in a bearish trajectory to possibly consider short positions. Fundamentally speaking, it's due to the pressures which are being mounted on oil producing countries, or OPEC if you may like, to lower the prices of oil in an attempt to have the Russian-Ukraine war reduce in its continuation, or for the war to come to an end. And somebody might ask why. It's because Russia is also prominent in the extraction of the oil of the gold of the desert, which is the oil. And as long as the prices of oil in the global standards remain high, they will have enough money to keep countering the confrontation with the Ukraine state. So we likely see this low being taken out and price to possibly come and challenge the 67.20 area of interest down here. Now, if this is your first time to have heard about the financial markets, consider visiting hfm.com, click on the registration, and begin your registration process to have our experts contact you to help you proceed with the registration of your account, which is going to enable you participate in the global markets. That is in the attempt you're going to face a hurdle. Alternatively, reach out to your mentor who has led you to this chat box of the daily morning market call, and they will guide you through the process. And it's completely for free, and as you bridge your educational gap to participate actively in the financial markets and give possible direction of the financial markets to see profitability. As a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. Kindly do your due diligence and remember to observe risk management. Until tomorrow, the same place, the same time. Take care and God bless.